The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and this is our hour to talk taxes. So whether you're getting love letters, you're wondering about next year, you're wondering about last year, whatever it has to do in the world of taxes, we want to help you. Our phone number in studio is 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. We are waiting on President Trump to come up with what he's going to do as far as extending some of the pandemic money that was out. I think right now that he's saying that he's going to extend the unemployment by the $600 or near $600 figure and the eviction portion of the former bill that was passed, but we'll see what's going to happen. And certainly as soon as it happens, and whatever happens in the world of taxes, you know, EG Tax is there to help you. And I'm joined in studio with Tiffany Fabian. Hey, Tiff.
Hey there, Esther. Happy Saturday.
Happy Saturday to you, and Christopher Fabian.
Hello, Esther.
Hello, Christopher. So, all right. So at the office, what kind of love letters are we getting?
A lot of college. So a lot of people, I think that's New York stick right now. College, making sure, of course, for New York, you can only take the college credit if it's bachelor's or below. And so a lot of kids were in a year where they were part bachelor's, part master's. And so they have to get a billing statement to prove it. But if you don't prove it.
Get the billing statement and you're good to go.
Right. What kind of letters are you
Yep.
seeing?
And I know.
Don't pay it.
Right. And I know there's a lot of people out there waiting for their refunds to come from the IRS with their amended returns. And, we get calls, like 5 calls a day. Where's my money? I filed back in March or April.
Yeah, but I had a client the other day that texted me, and I said, you got to understand that really 3 weeks ago they were shut down.
Right.
So they're just coming back, and they're processing these things, and I got to believe they'll be out shortly.
Well, when we just called yesterday, they said you got to give us to November.
Yeah, whoa. I
Yeah.
guess that's not shortly.
Yeah. So, with the IRS, with refunds, you got to be a little bit patient for amended returns because those are paper. They're not electronic.
Right, but again, like we always say, if you're waiting for your refund, really, if you just change your W-4 at work, you could get that money as you earn it, and so you don't get a big refund, so you're not waiting with whatever baloney happens during the year, right? I mean, who could have ever thought? I was talking to somebody the other day, and I said, who would have ever thought that you'd be working in your apartment and you can't leave your building? I mean, who? It's just unbelievable. It's never
Write
happened
this
before.
stuff. Yep.
Okay, let's. This is our subject of the day, and then the second half we have a special guest, Franz Ross from Going Concern Valuation, who's going to talk about business valuation and how to valuate your personal home. And this is especially important with interest rates at an all-time low. And last week we talked about if you don't refinance and you got interest rates over 4 or 5%, shame on you. He's going to talk about what it takes to get the best valuation for your home or business, because this is the time to do it. So that'll be on the second half of our show. But right now we wanted to talk about things that people ask about all the time, and that's gifting.
Right.
So people wonder, how much can I give? Who can I give it to? Do I have to pay taxes on it? And this is really important. And again, 8030930, 8030930, star 930 on a cell phone, 716-8030930 if you want to text us. You can give up to $15,000 per person per year, and they don't have to be a relative, without having to do a gift tax return. So you can give 15, your wife can give 15, which is 30,000 to anybody you want. So if you got 10 people, you could give 30,000 times 10, which is 300,000, and not have to do a gift tax return.
Right. And if you have to do a gift tax return, Esther, is there a tax?
No.
Well, not usually, because there's a gigantic exclusion, that people aren't aware of, that the unified exclusion right now is $11.58 million. So if your estate is going to come up over that, and actually it's more like $23,000 if you're husband and wife, before you'd pay any gift taxes, because all this gift tax return does is reduce that unified exclusion upon your death.
Right. It's like a bookkeeping form, so you can track.
Right, it's a bookkeeping
Right,
form.
so you can
That's
track if you're nearing the ceiling of that lifetime exclusion.
Right. And the other thing that people, and like I said, it's 11.58 million lifetime. If you go over that figure, the tax rate is anywhere from 18, it goes from 18% up to 40%. Now, a lot of people don't know that, and I'll say grandma and grandpa, they can do a 5-year exemption of $75,000 towards a 529 plan, or $150,000 if a couple gives to a university 529 plan. So you would take that, if you put $150 in for your grandchild that's maybe going to Princeton or whatever, then you can gift that away, and again, you don't have to do a gift tax return for it, and the person receiving the gift is tax-free to them, but the person paying it, it's not deductible, because it's really getting rid of your estate.
Right.
Yep.
You also can give gifts to charity, and that's not subject to gifting rules. You can give gifts of capital assets, pensions, IRAs, and annuities. Those are taxed taxed upon liquidation. But if you inherit it, you get a stepped-up basis at the fair market value at the date of the death of the person that gave the gift.
Right.
Right.
Now, here's the thing, which is really something that people need to know about. If you give a gift before you pass away, it doesn't go through your estate, that's a bad thing. Could be a bad thing, right? If you give a gift,
Crickets.
let's say of your house,
Oh,
before
yeah,
you pass away,
the stepped up basis.
you don't
Or
get
you don't
the
get the
basis.
people receiving
Right.
it don't receive the stepped up
You have to go back
basis.
to the original basis.
Right, so if you want to give a house to your kids and you don't want it to go through your estate, and you put the kids on the title now without doing a life estate, then the kids have to go back to the original basis of grandma and grandpa or mom and dad, and they're going to pay the taxes upon the sale. So you want to make sure you know what you're doing before you just start giving stuff away.
Right. And, I want to say, if you have an aptitude or if you find this topic really interesting, don't forget our tax school starts mid-October, and you can sign up on our website at egtax.com, or you can call.
I love this stuff.
Oh, you
I love this stuff. I
love.
mean, it's like, wow. Sometimes you have people that come in and they go, well, what if I sell my business? Well, if it's a C corporation, it's a family business, and you had it for X amount of time, the gain up to X amount of dollars is going to be tax free. People don't know that, and it's so remarkable.
Right. It's very exciting stuff.
All right, and the other thing is, you can use life insurance, because life insurance owned by the beneficiary doesn't go into your estate. Then your beneficiary, who would have paid estate taxes if you had one of these ginormous estates, would have tax-free money from life insurance, because life insurance is tax-free, and they can use it then to pay the estate taxes. So that's something you need to do. You need to plan on that.
Yep,
Right?
yep. I know there's some business owners that they get life insurance, so heaven forbid it, when they pass away, the estate taxes can be covered with that life insurance
That's
policy.
right. And it's a great tool. Why don't we go to Dave, who's been waiting. Hi, Dave. I'm Esther Gullius. How can I help you?
Hey, hello there.
Hi.
I heard a guy on the radio earlier who works for heating and HVAC place up here,
Right.
mentioned that there's some kind of tax credit for high efficiency furnaces.
Not really. Only if it's solar. It's got to be passive. Those credits are gone.
That died. They renewed it for 19. They haven't renewed it yet for 20.
Right.
Oh, see, I got a new furnace in 19.
Okay, and if was it
And
one of
what
the
was
high
it?
energy?
Right.
Yeah.
Okay, if you didn't, it's like a $200 credit, so we could go back and amend and get you the $200.
That would only be if I had any tax liability, right?
Correct.
That's correct.
Okay, so what if I put it on my... we're not married, but her name's on the deed, too. Can I put it on her return to save her the $200?
She had to have paid for it.
It's going to follow who paid for it.
Is it out of a joint
joint
checking
account?
No, it wasn't out of a joint checking account. It was out of mine, I believe.
Yeah, that would be the problem.
Okay.
All right.
All right, I give up. All right.
Hey, thanks. Thanks.
That's
There's
funny.
Like all the loopholes have when you really bore down, you find out, then there's this and that and the other thing. Hey, I'm Esther Gullius, the tax lady, 8030930, 8030930, star 930 on a cell phone. And we're going to take a short break, and we'll be back with your calls on the other side and our special guest, Franz Ross.
We are family.
Hey, you know that's how we feel about you, to us, your family. I'm Esther Gullius, the tax lady. If you need the best tax help, give us a call, 8030930, 8030930, star 930 on the cell phone. Our text line is 716-8030930. We're kind of talking about, before we talk to our special guest, Franz Ross, we're going to finish our conversation more or less on gifting. So you want to make sure that before you gift an asset, you understand how it's going to affect your heirs. If it goes through your estate, they're going to pick it up at a stepped-up basis, unless it's a pension or an annuity. If it's a capital asset, they get a stepped-up basis, which means that they pay taxes on any gain from the date of your death until the time of sale.
I
And
know
then
I was
let's
talking-
face it, for most people, it'll be a wash. Yeah,
I was talking to a client the other day, and her mom had put a house in a life estate, but then she was, she did something, and she ended up remember you were involved in that call, Chris? She ended up gifting it to her kids, and so before she passed, and so it became all going back to the original basis.
You got to really watch that. And if you have already put your kids on the title and you didn't do a life estate, you can undo it.
Right? You pull it.
You can undo it now and then put it through the estate or do a life estate, and that'll kind of unscrew the spaghetti.
Or if you did a life estate when you were 60 and now you're 75 and your kids moved away and you want to move down south with them, you take the house out of the life estate before you sell it so the kids don't get killed on taxes.
That's exactly right. Right?
So
All
there's...
right. And now here, we were talking about the gifting limits of $15,000 per person per year. There is no gifting limit for spouses, dependents, charities, political donations, funds paid directly to a political institution on behalf of somebody else, funds paid directly to a medical institution, practitioner, or health insurance on behalf of somebody else. So let's say you have a kid and you gave they're sick and you paid $30,000 to the hospital directly. That isn't subject to gifting rules. And gifts to non-citizen spouses are limited to $157,000 per year, whereas normally to a spouse there would be no limit at all. So you want to make sure that if you have any questions on gifting, give EG Tax a call and we'll help you. And in the meantime, we have Jill.
It's Jilla.
Oh, Jean.
No, Jilla. We're with Jill.
Jill.
Hi.
Okay, Jill.
Well, this is a somewhat of the topic that you're going in.
Oh, that's okay. We'll talk about anything.
How does it work with estate tax if you sell a house? I mean, do you have to, not estate tax, excuse me, capital gains tax?
All right. So is it your personal residence?
Yes, principal residence.
And you've lived in it for the last 2 years
Yes,
as your personal residence?
correct.
And you're single or married?
Single.
All right, so the gain would be limited to $250,000 tax-free. So if the gain is $175,000, it means all of it's tax-free.
Not the sale price, the gain.
The gain.
Okay.
So if you sold it for 300,000, you paid 150 for it, put improvements of 50, so your basis is 200. You sold it for 300, so you have a $100,000 gain. It'll be tax free.
Right. Now, what about if you've done improvements, but you don't have like the receipts? Like I put a new roof on.
Well, and I have to tell you, you want to, even though it's not deductible because it's your personal residence, you want to make sure that you save those receipts. So how long have you had the house?
Almost 30 years.
Okay, so when did you put the roof on?
Probably 10 years ago.
So I'd go back to the roofing contractor and see if they can't give you a gift, a receipt now.
I mean, how much did you pay for the house 30 years ago?
Like 104.
And how much are you selling it for?
About 350. So we're going to be right at that mark.
Right, but then you back
Then
off
the
the
lawyer-
the closing
realtor
expenses.
The transfer
expenses, the
tax.
expense of sale, right. All of that reduces your gain too.
Oh, it does. Okay.
Yeah.
Yeah.
You're going to be fine, I
You'll
think.
be fine. But again, anybody that's listening, if you've done those capital improvements, they aren't deductible now, but they will come into play, especially with our hot real estate market. You want to make sure, and that kind of leads into Franz, what he does, but you want to make sure that you save those receipts because you would need them in the event of a sale if you had a large gain.
Okay, great. Thank you.
All right?
Good
Thank you.
question.
Okay, and then
Gene,
we got Gene. Hi, Gene.
Yes, hello.
How can we help you?
Yes, how are you today?
I'm great.
Great. I had a question about capital gains. Before I check out, I understand that all capital gains in the stock market, if passed on heirs, are tax free.
Okay, check out where?
Do you mean-
are you leaving us like forever?
Leaving this earth. All right.
Okay,
In other words,
so
in other words,
if you're in the 15% bracket or lower, the capital gains are going to be at 0%.
yes.
The maximum you're going to pay is 20%.
and then when you pass
And then
away,
plus the state of New York.
when you pass away, your children or
Will
your
get the stepped up.
beneficiaries will get the stepped up basis.
Yeah.
If they inherit it.
All right. However, let's say not all stocks go up. I have a loss or two in stocks. Is it more advantageous to sell while I'm still alive?
Well, it would be advantageous if you're somebody that's paying taxes. But obviously, if you have no tax liability, maybe your income is lower than what would be taxable. And so for you to liquidate the stock right now wouldn't necessarily make any sense. It would require you to sit down, come on in, we'll sit down and go over your portfolio and we'll make some suggestions. But if you don't pay taxes and you sell it at a loss, that loss is just going to carry forward and it's not going to benefit anybody.
Or maybe you're so low below the taxing filing that if you sold it, the capital gain is less than your filing requirements, and so that would be beneficial.
Yes.
Yeah,
Yes.
where you could sell some of the gains
Uh-huh.
too to offset the
Right,
losses.
right.
So
it'd all just be planning.
All right.
And so it's a really good
Are
question.
Are you looking from an estate point of view?
Yes.
Yeah, that's good. Well, in my opinion, everybody should sit down with a tax professional and many times with their attorney to come up with a plan, because what you do while you're still here can substantially negatively affect those people that are inheriting your assets.
Right. All right. All right. I can always do that. I can follow up with.
Absolutely. There's no charge. We're very happy to help you.
All right. Thank you very
All right.
much.
Thanks a lot. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930, and we have some text, right?
We do. E.g., I have to work from home. Is there an opportunity for tax deductions? I'm paying the electric for the company provided computer, and I'm using my home phone. So is there any deduction?
Well,
Yes and
on
no.
the state of New York, there is, but not on the federal, unless you're self-employed.
and you got to make sure it's a room solely and exclusively used for business. It can't be your dining room.
But
table.
again, if you're an employee, there is nothing on the federal or
Right.
the state. So there's nothing on the federal for sure if you're an employee. if you are an employee and you're working in a room, like Chris says, used exclusively for business, and that's where you are, that's where you're devoting your time. You're not working on the kitchen table, dining room table, in the living room on a laptop. You got a room set aside. On the state of New York, they do allow the office and home.
Whereas on the federal, under the tax reform, they got rid of job expenses for W-2 employees. So
Right.
that's where that
And
stands.
I know this is becoming a big thing because people are now providing a lot of benefit to their employers working at home. Now, I will tell you before the end of the year, I think there's going to be some changes in the tax law, maybe relative to that, but right now, that's how it sits. Right?
Yep.
All right, and we have Dan, right?
Well, Luann was next.
Well, okay. Well, got Dan on the phone now.
Hey, Dan, how can we help you, sir?
Hi, how are you? Let me turn off my sound here. Can you guys hear me okay?
Yep.
We can.
Okay. So I'm not very, good with tax, knowing all the law and stuff like that. But I wanted to ask you, we built a house in Florida.
We got to Frank's
I
playing
think,
the
hold
music.
on, we're going to take you after the
Again,
break.
We're going to take you on the other side of the break. We got a break for news. I'm Esther Golias, the tax lady from EG Tax. We'll see you on the other side.
We are family.
Hey, I'm Esther Golias, the tax lady from EG Tax, and we want to help you. We're talking right now gifting and any other tax questions you might have. And then our special guest, Franz Ross, is going to be here shortly, but we put Dan on hold before the break. Hey, Dan, what was your question?
Yeah.
The house you built in Florida.
Yeah. So we just built a house in Florida, and I was wondering, it's for personal use, but we were toying with the idea of an Airbnb. Let's just say hypothetically, if we decided to sell the house because maybe we got over our head or whatnot, how would the capital gain tax, like how much do you think we would have to pay into that? I don't know how all that works.
All right. Well, first of all, you only pay taxes if you have a gain. All right.
Okay.
So if after what you paid for it, plus the land, plus the expense to purchase it, plus all your improvements, plus maybe the furniture and fixtures you left in the house, plus the cost to sell it, if that results in a gain, that's where we're talking. Now, if you don't rent it out, then it's a sale of a personal residence. And if you hold it for a year, then if you're in the 15% bracket or lower, you're going to pay zero taxes on it. And if you're over the 15% bracket, the maximum you can pay is 20%.
And because
that would be
it's-
on the gain only.
And because it's his second home, this is something that raises a potentiality for capital gains.
Yeah.
Well, if he sells it at a gain.
Right.
Right? So that would be it. So do you think you could sell it and make a profit?
Well, yes. I think
Substantial profit after all the expense to purchase, expensive sale, realtor,
Yes.
attorneys? Yes?
I think that we could probably be plus 25,000 if we sold it right now, making all of our money back plus 25.
Okay, so the worst it's going to hurt you is like $5,000.
Okay.
Okay?
Just
Plus the state of New York.
And then you could always use it as B&B. And so that would go on a Schedule E, and you're going to keep track of all the money in and all your expenses, and you get to depreciate a little bit of the house each year.
Right. Again, if you don't sell it.
correct.
Okay?
Thank you so much.
But what I'd suggest you do with anybody that's listening, give us a jingle. Hey, and our special guest, speaking of all this kind of stuff, I'm sure he's chomping at the bit because this all requires an appraiser. And so we have Franz Ross from Going Concern Valuation in studio. We thank you, Franz, for stopping in. How is it that appraisers are part and parcel of the sale of assets and valuation for businesses? Why is it important what you do?
Well, Esther, thank you, and I enjoy very much being here. And I'm a happy EG Tax client. EG Tax does a great job for small businesses like mine. By the way, I'm a number cruncher, and yet, even though I've been a number cruncher all my adult life, taxes are really complicated, and so I'm so happy that EG Tax and Tiffany in particular can help me.
Well, thank you very much. So who needs an appraiser? Why?
Well-
and how can we help ourselves on the appraisal portion?
Well, the thing that I'm here to give a message on is that, first of all, I specialize in the appraisal of primarily commercial real estate and also businesses when there's potentially no real estate involved. I'm a licensed appraiser in the state of New York, a commercial appraiser in the state of New York and Pennsylvania, and for real estate, and there are no state licenses in business valuation, but I have 2 designations.
So if somebody wanted to, sorry to step on you, if somebody wanted to get a loan, they would need your services, right? Possibly.
Well, not so much. I mean, in that the banks order their own appraisals, whether it be a business valuation or an appraisal for real estate. And so, and actually, what I think is important to talk about is that you have, or this station has had, will have on today 3 money managers talking about how to manage one's assets and how to not be too much in any one asset and diversify and so on. But people who own commercial real estate, whether it be rental properties or other business properties, or who own their own businesses, those people have a problem of diversification in their portfolio. And I talk about that's managing your one stock portfolio. And so people who own their own businesses oftentimes have great difficulty making the contribution to their IRA or 401k because they're just putting all their time, effort, and money into the business. And so they neglect sometimes to put that money away for the retirement accounts. And so they should try still to fund it. But if they don't, whether they fund it or not, they still have this diversification problem in that they're putting all their time and effort, and perhaps half or more of their assets might be the value of their business. And yet they don't necessarily know the value of their business. And so that's where...
So are you saying that you would order an appraisal on your existing business so that you would be able to plan for retirement?
Absolutely. What I would
Because you
suggest to
just
people
say,
who own a small
so
business...
when I'm ready to sell, I know that it's worth X amount of dollars, right?
Well, right. And businesses can change in value fairly rapidly. But
Especially with COVID, right?
yes, absolutely. What I would suggest is that no one needs to get a business valuation done every year by any means, but every 5 years, they probably ought to take the temperature of the business. And
is it an expensive procedure?
well, and it's not inexpensive. I'm going to say that a fairly small business, it probably starts at around $800, and most small businesses, I can do a business valuation for $1,500 or less. And yet, there's your competitors, the big accounting firms, charge a lot more.
Yeah, I'm sure that's true. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on the cell phone. What we have some calls on hold. We're going to take those, and in between, we'll talk to Franz about what he offers. We have
Luann, who's been waiting.
Luann. Hey, Luann, you've been waiting a long time. Hi, Luann. How can we help you?
Hi, thank you for taking my call, Esther. Thus far, we have not received a stimulus check nor a card, a cash card. I've tried going online and calling the IRS, and it's to no avail. So I'm wondering, it seems like our AGI enabled us to receive some kind of refund. Is that just lost?
No, you're not going to lose it. Tiff, Chris, you want to?
Yeah, I was wondering, did you go to irs.gov to check on the status of your stimulus check, Luann?
Yes, I did.
And what does it say?
The thing is, we have two different residents that were residents of North Carolina, and then in the summer we're residents of New York.
So it says that
Does
it was
say
sent out.
You don't qualify, or they don't have enough
Or
information?
does it say it was sent out?
It says cannot track this, cannot track it. And we were up here, we paid our money in February because we owed both federal and state. And I'm just wondering if we received something and they would not forward it.
There's a tracking refund form that they want you to fill out. It's a form 3. I'll tell you the form number in a minute. But another idea is if you call me on Monday, we could call the tax practitioner line to check the status of it as well. But the form number I'm going to get in a second now.
It may also be, you have to match your address with the return you filed. So you may have used your New York address instead of your North Carolina address. And North Carolina was on your tax return, and that's why they're saying they can't find anything.
But here's the bottom line, Luann. In the event you don't get this situated before tax time, you will have an opportunity to put it on your 2020 tax return. But I would suggest you give Tiff a call on Monday, and she will be honored to help you.
Yep.
That was wonderful. Could you provide me?
I will. It's 632-7886.
86.
Okay.
And ask them to page me.
If she doesn't answer the phone right away, just have them page her.
Okay.
All right, good, Luann.
For your
Okay, and let's go to Marlene.
And that
Hey,
form
Marlene.
number was IRS form 3911.
And Marlene from Williamsville. Hi, Marlene. How can we help you?
Esther, I'm calling regarding the minimum distribution waiver regarding the 2019.
RMDs. Okay.
And besides, if you didn't need the money to take for that reason, what would be the advantage or disadvantage? Would it be a tax thing, like maybe you're going to make more money this year than next year? Or
Well, I mean, you don't need to. Let's say your RMD is $25,000.
Uh-huh.
So if you're paying taxes, and let's say you're in the 10% bracket, you'd pay $2,500 in taxes. So if they say you don't have to take it, you save $2,500. Plus the income is still in there growing. So, but many people who don't have to take the RMD should take the RMD because they don't pay taxes. So if you're not paying taxes, you'd want to take the RMD because you get it out tax free. So it all depends on what side of the line you end up on.
I am paying taxes. So
well, then the least you're going to pay is at 10%. So if you take out $25,000, you're going to pay $2,500 in taxes.
Okay, so basically, if I don't need the money, then the advantage.
Why take it out?
Well, I was thinking that
my whole thing in life has been defer, die. So
Well,
if I do this right, I will die out of the problem.
Yeah. No, I was just thinking that maybe next year you'd have more income.
But it would be so small because basically they just adds. They make you take out like 1/25 more.
Uh-huh.
And it's just so small. I wouldn't worry about it.
Yeah. Okay. Well, the last time we did this in 2009, I didn't take it and didn't think about it. But this time, of course, I was overthinking it. And
Sure.
Maybe there's an advantage and a disadvantage here.
Well, if you didn't pay taxes, I would take it, or think about taking it and find out how if you're going to pay taxes at all. But if you are in the tax, if you do have taxes, then you'd save yourself the liability.
Yeah. Okay.
Okay.
Thank you very much, Esther.
All right. Thanks a lot. And who do we have next?
We have Ken.
Hey, Ken. How are you, sir?
Very good.
What can we help you with?
My question is, my income is so low that I don't pay taxes. And when I get the stimulus money, is that taxable?
No, sir. Tax-free.
No. Okay.
Okay, but people with unemployment, fully taxable. So especially if the president extends the pandemic unemployment section for $600 till the end of the year, that's what I heard that they're going to do, then boy, I'll tell you, you should make sure you have the taxes withheld.
Yep.
Okay, and who else we have before we get back to our guest?
We got Mark from Lockport.
Hey, Mark, how can we help you, sir?
Hi, dear. I have a question about final estate tax.
Okay.
We're looking to wrap everything up, Do we have to wait till next year to file it, or can we file it at any time?
Are you all done with the? When did the decedent pass away?
Last year,
When?
October.
So October of 2019.
Correct.
So October of 2020 would be the first if you're doing it on a fiscal year.
Right.
And then from October 2020 to October of 2021 would be the next one. So is everything liquidated?
If everything's liquidated right now, when's the earliest we can do it?
Was there any income for 2020?
Yes. Well, possibly. We just want to finalize.
Okay, so why don't you guys tell them?
Yeah,
what he
so
has to do?
depending on when the lawyer has it, like Esther was saying, if it's a fiscal or a calendar year, the first time you would be able to file it would be November, if it is a fiscal, November of 2020.
Okay, so we couldn't do it right now.
Coming right up.
Yep.
Okay.
Very much.
All right, good enough. All right, and we're going to go back to Franz. Hi, Franz.
Yeah, and Esther,
yes.
can I ask Franz something?
Absolutely.
Franz, a lot of people have gotten the PPP loan and they're struggling with getting the money spent. And you had a topic that you were talking to me about the PPP.
Well, I talked about debt. Well, first of all, the PPP loans are generally mostly forgivable, assuming that the funds are spent for payroll and allowable expenses. And so they don't result in the owner of the business having additional long-term debt. But in some cases, what businesses do need to do, well, first of all, I think the right way to handle COVID is planning, whether you're an individual or a small business. If you've been negatively impacted, you need to do some planning and budgeting. And potentially that could mean going to your bank if you're a business and saying, and by the way, for individuals, a lot of the credit card companies and so forth will, even if you call them up, there's an automatic message if you're having difficulty, talk to them and they'll try and make some arrangements with you. But if you're a business, if you go to your bank and you have let's say a relatively large loan and you're struggling to pay it, if you put together a business plan and say, here's my plan, and this is how I see getting through the next year that's going to be difficult, and can you defer my principal payments? I think in many cases a bank would say yes. No guarantees of that, but also if you don't ask, you don't get.
Right. Well, and that's what the whole thing is, Franz, is that many times people just like an ostrich. They stick their head in the sand and think it's going to get better. I'm Master Goliath, the tax lady from EG Tax, where he joined in studio with our special guest, Franz Ross. He's a business appraiser. For those of you that have small businesses, we're going to take a short break and we'll be back on the other side. If you are a small business and you're wondering how to get your business appraised, we'll talk to you on the other side. I'm Master Goliath, the tax lady from EG Tax. We think of you as family, and you know that if you have any questions, give us a call, because what we don't know, we certainly are going to look up. And right now, because we want to get you the right answer. And right now, we're all being kind of challenged. It's very difficult with COVID, people not working, with unemployment. They're going to have to pay taxes. Businesses are closing, and Franz Ross from Going Concerns Valuation is our special guest. I will tell you, many times I say to people, Franz, go buy an existing business, and bizbuysell.com is a great website with businesses for sale for people that want to become entrepreneurs with existing businesses. That would be a perfect situation where you don't know if you're buying a pig in a poke, and that's something you can help us with, right?
Yes, and actually I use BizBuySell as one of my sources for information for asking prices and capitalization rates on an asking basis, and yet it's also important to go to what are such businesses actually selling for. And actually it's amazing how there are a lot of experts out there who don't know what's going on. I just looked at an appraisal of a funeral home that I was asked to review the appraisal, done by one of the top 2 or 3 national appraisal companies, and I have far more data that I put in my funeral home reports than they had for this national appraisal.
So when somebody wants to buy a business and they say, and the business owner's asking for $500,000, you actually could get involved and say, this is what I think.
Well, yeah, there's asking prices and then there's selling prices, and someone who's selling their business should ask for more than they're actually thinking they're going to get. They should probably price it 10% higher than they really think it's going. If I appraise a business for a seller, they should ask more than my appraised value. And similarly, if I was doing an appraisal for a buyer, the likelihood is that I'm coming in a little lower than an asking price, and somewhere people meet in the middle. But it's important to a buyer should consider getting a business valuation done or a going concern appraisal done. If someone's buying a restaurant that has real estate and business, I'm qualified in both disciplines. There's no one else in Western New York can say that.
So what is especially important as you're aging and you're looking at your estate, and that's one of the things I want to talk about with the gifting and the estate taxes, you really need to know what your business would appraise for, because while you're doing your estate plan, if your business is worth $10 million and the unified exclusion is 11.5, for instance, and you have other assets, your estate might have to pay taxes. So that's something where if you don't know, you wouldn't know that you had an estate problem.
Well, and not only the tax issue, but if someone is preparing their estate for eventually giving to their children, and they have 3 children, and they have a business, and perhaps one of the 3 children is going to inherit the business, how do you equitably distribute the assets of that estate? Right. Well, you can't do it unless you do a valuation.
Right, and that needs to be done in advance.
Absolutely.
So, and that's really the conundrum, is many times on our shows on Saturday, we're always talking about you should plan, 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 you should plan. Many times what happens is it's too late, baby, and they come in after the death of the person that had bequeathed the assets. And now, do you get called in after the fact to do the evaluation as well?
Actually, I'm working on one right now on a restaurant, which, by the way, let me bring up something else. I know of 2 local restaurants doing extremely well right now, and neither is a national brand. It's just interesting that as much as there's a lot of restaurants that are suffering, there are some that are actually doing better than ever. Yep. If they have a good delivery program going on, or fast food restaurants that have a drive-through are doing better than ever. Yep. So that there's no one-size-fits-all of what's going on in this current economy.
All right, so if we need to get a hold of you, Franz, your phone number is 440-1966. Going concern valuations, whether you have an existing business, whether you're thinking of selling, whether you're thinking of buying, if you're thinking about a business valuation with your business, you can contact Franz Ross. Going concern valuations, 440-1966. You have a website too, Franz?
Yes, you can. GCvaluation.com is my website. It doesn't come. It's a pretty new website, so unless you put it in your browser, it won't come up unless you put it in the browser at GCvaluation.com, or you can email me at info@GCvaluation.com.
Hey, Franz, we really appreciate it.
And by the way, if someone has some questions about their business and wants some of that, just consulting, I'll do a free consultation with anyone. I'm happy to do it.
That's great, and that's so important, because we talk about pre-planning all the time. Mm-hmm. And speaking of pre-planning, we have line 5 who's been holding for a while. How can we help you?
Al, are you there?
Taking my.
Al?
Yeah, I heard you, Al.
Oh, can you hear me now?
Yep.
Yes, sir.
Okay, so Chris, was your 1 o'clock yesterday. I should have asked you a few questions yesterday, but question:
I'm selling a couple of properties for my father. He bought them on the west side, and believe it or not, he bought them in the 80s, and they were like $10,000. And so he's going to make a pretty good profit on them. What kind of tax capital gains is he going to look at?
Now, he's still with us.
Yes.
Okay. And these were rental properties.
Yes.
And how much is the asking? How much do you think you're going to sell them for?
150.
Okay.
Each one or total?
Just each one.
How many properties?
2.
So 300,000.
Yeah. So you're
probably a zero basis, right?
That's what I'm thinking.
So you got a $300,000 gain. The worst it would be is about 60,000 plus the state of New York, another 50, so about $110,000.
What you may want to do is look into doing an exchange
1031.
Even if he doesn't want to be in rental property, Russ Gullo has products where you can invest into like Dollar General buildings, Walgreens buildings, where he gets a guaranteed check every month.
And that would save him the $110,000.
Yep.
Which would be especially important for you guys as the heirs.
Yeah.
So, but obviously we don't have time to talk about it right now, but I'd suggest you call Chris back on Monday.
Yep.
He could put you in contact with Russ Gullo. That would save you a lot of money. In the meantime, those of you that have businesses or you need an appraisal, Franz Ross from Going Concern Valuations, 440-1966 will help you.
And there's a text question.
And I will tell you if we have, if they change the law during we will, that EG Tax will be there to let you know what's going to happen. I think they're going to not do right now the second stimulus, but that may come out later. But until next week, I'm Esther Golias with Tiffany Fabian, Christopher Fabian, and our special guest, Franz Ross. Until next week, have a great week. Bye-bye.